So this is my first trade on my first day of trading in 2026. January, what's the date today? January 6th. And here is the setup in terms of the numbers. I'm running it on demo, $10,000 demo account, and it allows me the maximum number of units, 8. If I trade 8 units, I'm using almost all of my margin, right? With 8 units, I'm using $9,136. All right, so that's the setup, numerical setup. Now let's go to the trade. I entered this trade very early at, what is it? This is 9:30. This bar is the opening bar. 9:30, 9:35, 9:40, 9:45. I enter at the beginning of the bar that started at 9:45. It's a very nice run. Why did I enter it? I have positive bar, opening bar, up, then down, then it goes under, then goes up. So I believed this point here was a good point to enter for the high probability trend emerging, and it actually did. Now you see the whole bracket is here. My 1 to 1, profit to loss bracket ends here. Why didn't I keep it until the end of the bracket? I didn't because I was hitting a very major resistance at this point. That's why I took an exit. All right. So instead of making the full bracket, which would be about $120 profit, I made much less here. My profit was, let's see, my profit was $50 here. All right. Now I'm going to show an image which shows why I made an early exit. See? The peak here, and it approached the same peak. That's why I didn't wait for the trade to go from here, from the entry to the end of my bracket. I decided to manage this trade because there was a very high expectation of the bounce of this resistance level. All right. So this is why exit was done at this level, and this is why I did not earn the full size of the bracket here. Yeah, that's what it is. Is there anything else here? Yeah. All right, and this shows how far this trade would have gone if I let it go not only to till the end of the bracket, the full bracket, but if I let it go beyond the bracket. You see, if I let it go beyond the bracket, the total profit on this first trade would be 21.2 points, which is $260 profit. That would be 2.6%, because the account is $10,000, $260, 2.6%. So this shows you the potential of trading this way. first trade taken early at 9:45 would give us 2.6% if I didn't manage it, if I didn't cut the profit here due to the expectation of the bounce. All right, so that would be all as far as the first trade is concerned. Now, this is my trade number 2. On January 6, I entered on the continuation, expected, perceived continuation of the trend. The trend made a little congestion here. 1, 2, 3, 4, 5. 5 times 5, 25-minute worth of congestion, a little box here. Okay, and I usually don't take breakouts, but I thought that would be a good idea here after this heavy bounce here. So I did enter, but the price action was extremely sluggish here, very sluggish. That's why I decided to exit early. So basically, this was a break-even trade. I made like a $1 here. All right. So this is a little bit bigger picture here showing this trade and my first trade. Let's go further. Yeah, this is this $1.1 profit on it. This is break-even trade. And this is a 4-hour chart showing this very strong bouncing level. And that's why I made my exit. Okay. At this point, because it was hitting, the price action was hitting a very, very strong bouncing level, this level here. It's a 4-hour chart. I made an exit right here. I thought from this point it would probably start going down, and my trade was long. That's why exit was where it was. All right? Okay. That's all I want to say about trade number 2. So this is my trade number 3. Why did I enter? Price action bounces very nicely off this red line, which is VWAP. It bounces nicely off EMA 50 on 5-minute chart, crosses the major resistance. I thought that would be a good point where I could bet on the emergence of trend going up to here, perhaps up to here. So that's the rationale as the reason for my entry here. Again, I am entering into what I expect to be trending conditions. I'm interested in trends. I believe that, yes, a trend is actually your friend. Let's see what else I can say here. Yeah, this trade was managed. I didn't wait for it to go to 50% of the loss. I cut it at minus $41, at minus 0.41% of the account, right? This is $10,000 account. Let's go further. Yeah, and here is the actual, the strongest reason for me entering this trade. This was actually a very well justified entry. I entered on this MACD setup. This MACD is called LBR MACD, Linda Bradford Raschke MACD, which it has different settings than the regular MACD. The settings are 3, 10, 16. And when the slow line, which is the red line of this MACD, Linda's MACD, first crosses above zero, this line is zero, it crosses above zero, and the fast line, which is this blue line, goes down to zero. This red line is still up, but this goes down to zero. There's a very high probability that there will be a bounce, that this is going to go up. There will be a hook here, right? I mean, this hooking fashion, hooking price action. And this particular setup, when the slow line of Linda's MACD crosses above zero, and the fast line goes under to zero, this is called first. This setup is called, as per Linda's nomenclature, it's called the first. It's got very high probability. And as you will see later, this actually worked. It didn't work right here when I entered here. But this price action went actually from here up to here. You'll see it on the next trades. So this was a good entry. Unfortunately, it didn't do what I wanted it to do, and my exit was still relatively early. As per my strategy, exact strategy, I should have exited about 50% of the loss, but I thought I need to exit earlier. Okay? All right, this is my trade number 4 on January 6, 2026. This is this trade. All the brackets are the same. The brackets are the same as trade number 3, 2, and 1. And the entry is here. Why did I enter here? You see, the rationale for this entry was twofold. First of all, we have a bounce of EMA50 here, right? It bounces, and there's another bounce, so we have double bottom. This double bottom, and the price action goes up to here, which means it breaks this level. So there is a chance that this will be played successful as double bottom. And another reason for entry was the same as my previous trade. Remember, LBR, Linda's first. And that first, I don't know if I mentioned that it was, I saw it on 15-minute chart, right? The first showed up on 15-minute chart already as a stimulus for trade number 3, and I repeat the same thing here. Unfortunately, I'm not successful. The entry is okay. There's nothing wrong with the entry. I'm expecting, because of the first mainly and also double bottom, that I can have the trend emerging from here and going up. Unfortunately, it didn't happen. And again, instead of waiting for 50% for the loss equal to 50% of my total allowed loss, I made an exit earlier. All right. Okay, let's see if there is anything else to be said here. All right. So this was my exit. Actually, from the entry point, I didn't go into profit at all. It went straight down, and I took the exit. Oh, here you see the same configuration of MACD, LBR, Linda Bradford Raschke MACD, with numericals 3, 10, 16. It's the so-called first. Well, the slow line goes for the first time it goes above the line 0, and the fast line goes down under that slow line touches zero and reverses, it creates that hook. It's a very high probability entry. Unfortunately, I did not make money here. All right, I guess that's all I was going to say about this trade. Actually, there's one more thing. I lost $56.6 here on this trade. Okay, I guess this is all I can say about this trade. This is my last trade on January 6, 2026, my first trading day of the new year, 26. This trade, these two brackets here, and I entered here. Here was the entry. I entered. The price action shows very beautifully the potential for the emergence of the trend. You have what I call, all these EMAs here come to the point of one point. It's not congestion. I had a word for it. Anyways, it just escapes my memory. But when all of the EMAs come to the point at which they start crossing each other, yes, it came back. It's called, I call it EMA squeeze. Yeah, they were separate here, but then they squeeze. They get squeezed. On the top of it, we have double bottom. On the top of it, this, as you will see later, this is also still based on 15-minute first. All right? That's why the entry was here with the expectation of the emergence of trend. Now, I made an exit here. This line, this green line shows the level of my X and the Y. It was I shouldn't have exited here. I chickened out. It was my first day of trading. It's a warm up. I really should not be doing this because I'm gonna be wrecking my statistics if I don't keep the trades running till they totally exhaust their running potential. I'll tell you why I made an exit. You see this structure here? It's like a box. It's like a rectangular little box, right? 1, 2, 3, 4, 5, 6 times 5. 30 minutes, and this is the bottom of this box. So this box basically represents a little HCR, horizontal congestion level, and the price action was hitting the bottom of it, right? The bottom of the structure, and me being very, very cautious, I made an exit because it could have bounced. It could have bounced from this, and it could have gone down. So that's why I made an exit here. And yeah, I made only $47.2 because of this, right? Because of this excessive caution. Let's see if there is anything else I could say here. All right, this is shown on a 15-minute chart. And again, I'm showing that the actual engine for this, if we were to really narrow it down, it would have been the 15-minute chart first. See this configuration I described previously. If I played 15-minute chart and I made an entry somewhere here, this would be the entry on the 15-minute first, and it would make a very nice profit. Now, there is one more thing which I want to say here, but I think I need to bring one more chart on the screen. Yeah, to tell you one more thing. You see, I made 5 trades today. However, if I did not manage trade number 3, this trade here, right, which I entered here, if I did not manage it, if I let it run, this trade would not be exited. I wouldn't exit. It didn't even reach my total allowable loss, right? So if I didn't manage this, if I let it go, then the trade number 4 and trade number 5 would not, these trades would not have been taken, because the run of the trade number 3, no, it went here, but then the run, and the ran, and then actually the price action went much further. So these runs, which were part of the trade number 4 and 5, well, they were here, happening here in trade 3. So if I did not manage these trades, I would have taken trade number 4 and trade number 5. All right, I guess that's all I want to say here. On this image, I'm showing all my trades, all my 5 trades done today. It's a little bit beyond 3 o'clock afternoon. I don't trade after 1500 afternoon. And as you can see, if I traded, I basically stopped trading around here, around probably here, 3:30. Yeah, I stopped trading around 3:30, but I could have made another $120 here, another full bracket, because we still have the trend is going up. The EMAs are fanning very beautifully. Here we have a bounce of EMA 9, and we see that have another bounce of EMA 9. I would have entered here had I decided to trade further. And from here to here, we have basically, the bracket under $20. So I would have made more money if I traded longer. All right. There's one more thing I want to show. This is basically the analysis, the written analysis of all the trades. And the final result is about these 5 trades, they were all managed. My end result after these 5 trades was break even. Basically, I came back, I started from 10,000, the account, and it came back to 10,000, all right? If I did not manage these trades, as I've already told you, I would have not taken trade number 4 and 5, and I would be at 1.2% of the account profit, $120. So my first day of trading shows that it would have been better to not manage my entries, right? I would have made about a little bit above 1% of the account rather than break even. And this is all I want to say about my trading on the first day of the new year.